extended market minute. And I'm going to share with you what's going on in the market from a bond standpoint. I'm not a financial advisor. I do not give financial advice. You have to call the professionals for that. Todd Halterman is one of those folks that is licensed to give financial advice. I am not. I used to be. Way back at the turn of the century, yes, I did have my licenses, Series 7, Series 66, life insurance, got all those things. And I realized that, there were a lot of people that wanted assets or said they wanted to have assets or said they wanted to have a safe, secure retirement, but their bank account and their activities didn't quite align with their conversation. But if I looked at the balance sheet, their debts told me a bigger story, a little bit more about what was really important to them. Their debt said, I want debts, and I'm going to give financial advisors the leftovers. And at my size, I like the main course, right? Give the financial advisors the leftovers. Give me the main course. That's the debt side. So we started doing a lot of studying in debts, and we started seeing what is reality. Well, here's a bit of reality, because yesterday we got a report from the Federal Reserve. Now, I told you on Monday, it was Monday or Tuesday, I told you that the Federal Reserve most likely would be changing or would be increasing the discount rate by 75 basis points. Why did I have that suspicion? Why did I come out with that? Not because I've got a crystal ball on my desk. It's because I've studied the markets for years. Back in the Greenspan era, back in the Bernanke era, the Federal Reserve, when they didn't want to spook the market, somehow what they were thinking would get out to John Hilsenrath of the Wall Street Journal. Somehow that happened. I don't know how it happened. Well, we all know how it happened, but I'm not going to go there. But John Hilsenrath had the story ahead of time. He had it before other people had the same story. Well, I don't know remember whether it was Monday or Tuesday, we got a similar issue. I think it was the 14th. We had a similar revelation. I guess revelation is a good word. Nick Timiraos. I don't know exactly how to say Nick's name, but Nick Timiraos of the Wall Street Journal came out and said, I really think the Federal Reserve is going to, or the way he put it was, there's rumors that the Federal Reserve may hike rates 75 basis points. An hour later, after he had posted that story on the Wall Street Journal's page, he goes on CNBC and they press him. Is that your opinion, or do you have some other information? And he wouldn't respond. Scratch your head. What does that mean? Maybe he had inside information. Maybe there was a mole that leaked this information to him. And lo and behold, yesterday, the Federal Reserve does hike the Fed funds rate by 75 basis points. Why would they do that? Let's start there. Well, the reason they do that, the reason they would have that story get out, is they don't want to spook the market. Well, what does spook the market mean? Well, had the Federal Reserve increased interest rates by 50 basis points, the market would have said, you guys are not really serious about getting inflation under control. Might be really accurate. So they go to 75 basis points. Had they gone to the market and said 75 as they whisper number, okay, the market was expecting that. No problem. No harm, no foul. Had the Federal Reserve gone to 100 basis points, spook the market. Wow, the market's way worse than anybody ever thought. Might be. But they would spook the market. They didn't want to spook the market. So they go with that 75 basis point, which the market kind of built in from the day before. We see a tremendous improvement in the bond market. The mortgage-backed securities increased 122 basis points. Great improvement. And the stock market went up. But wait a second, overnight, the bond market, the mortgage-backed securities reversed. The Dow Jones Industrial Average reversed. We can see that on the futures early morning for those people that don't have a life like me, right? You check the market 2 in the morning, 3 in the morning, 4 in the morning. Market had reversed. What happened? The mortgage-backed securities now are down about 90 basis points. Why? Well, spooking the market. The Swiss central bank hiked their central bank rate by 50 basis points unannounced. Scared the market. There must be a lot of problems with inflation in the economy. Brazilian bank increased theirs 50 basis points. That's 9% they've gone up this year. Could you imagine what would happen in the U.S. if we raised our discount rate 9% in a year? They're at 12.25%. Bank of England up 25 basis points. Taiwan up 12.5 basis points. Bahrain up 75 basis points. So our 75 basis points, the largest hike in 28 years, well, didn't spook the market, but the other countries certainly did. We're in a global economy. Now, what's going to happen in the future? I don't have a crystal ball, but the Fed funds, the Federal Reserve members, the committee, they say that their dot plot says they want to be at 3.4% by the end of the year, which means we need another 175 basis points of increase if their dot plot is correct. That's basically a dot plot is where all the Fed people come up and they give their numbers on what their projections are on what they're seeing in the future. How do we get there? Well, we think that July we're going to see another 75 basis points. Then maybe 50 in September, 25 in November, 25 in December. Does that get us there? I think that math works. But we still have to be careful of the Federal Reserve because they only see unemployment going to 3.7% this year. 3.7% this year.
You know better than that.
We're already seeing the economy slowing, so how could it be 3.7? We'll watch. We'll see. The S&P 500 now down 127 points. Doesn't matter. We'll talk about it. We'll let you know that in just 1 second here. The 10-year Treasury down 6 basis points, yield to 3.337. Mortgage-backed securities, which were down over 90 basis points earlier in the day, are now down 37. So we're seeing some recovery there. And I report to you every morning, OBMMI. They have the most comprehensive, give me their soundbite here. Most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. Where did rates lock yesterday? Well, first thing I should tell you, because I give this to you every Thursday morning, Freddie Mac came out with their report this morning. And according to Freddie Mac, you got to love it, government agency, the mortgage market survey says rates 5.78%. You have to pay 9/10 to get it. But what does OBMMI tell us that rates actually locked at yesterday? 6.034. 6.034. Do you think the government number is out of whack? Jumbo loans, 5.46. FHA, 5.681. Best loan on the market for the people that earned it. That's our veterans. 5.518 is a VA loan. And for those of you in the Inland Empire and other rural areas, 5.683 is the USDA loan that has a very, very minimal down payment, if anything. So why is all this happening? Well, I told you in the last segment, if you missed it, you missed a lot. I'm not going to repeat it. Initial jobless claims measures individuals' filings for unemployment benefits for the very first time. Reported at 229,000 claims for last week. Represents a decrease of 3,000 from the previously revised report of 232,000 claims and was above expectations. Continuing claims increased by 3,000. I'm not going to go into a whole lot of this information because I did a lot of it in the last segment, but that is the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.